Hello, everyone. Welcome to the Prospero.Ai stock market live stream. Good to see you in here, Boyd Bailey. Stream's just getting started. We got a lot of fun topics today, interesting topics like usual. If you're watching on YouTube, please like, subscribe. If you're watching on Twitter, like and share. Ring the boats from Boyd Bailey. Uh, we'll get into a bunch of topics. If you're new here and you're watching for the first time, how the stream is going to go today is I'm going to give you a rundown of the topics that we're going to get into. Then George and I will discuss the topics in detail. And then we're going to end the stream with the model portfolio update, which we're going to try and get to slightly earlier today because there's a bit more than usual that we're going to do. So we're going to be looking at a lot of stocks and seeing what changes we want to make to the model portfolio. As people are just entering the stream, welcome. Let's get into the topics that we are going to discuss today. So, unfortunately, if you're a shareholder of this company, they had a pretty bad day in the market today, and actually a few years now. GameStop reported earnings, and they were not good. The stock was down over 14% today. And an analyst based off these earnings said that the company has about 5 years of runway left to function, and that they will go out of business by the end of the decade. So we'll ask George about what his thoughts are on that. There is a very interesting stat that I'll also share when I pose this question to George, which shocked me when I read it. So we'll see if it's as surprising to you guys who are viewing the stream. Next, these stories kind of go hand in hand. We have Robinhood, who was kind of behind the whole GameStop saga, launched a credit card, which was very well received by the stock market today. The stock was up at opening. The card will give everybody who's a part of Robinhood Gold 3% cash back on all purchases. And I think it's time, time has passed. It's time we start asking the question, has Robinhood taken the right steps, or are they taking the right steps to regain trust of investors? And we'll get into that more in detail. Next, we got a lot of people joining the stream. Welcome, everybody. If you're watching on Twitter, like and share the video. If you're watching on YouTube, like and subscribe. Welcome to the stream. Glad to see you in here. Next story we'll be discussing today is 7 of the nation's largest gambling companies, which I'll read them now for you all, but I won't read them later when we go over the story again. These companies are FanDuel, DraftKings, BetMGM, Penn Entertainment, Fanatics, Hard Rock Digital, and Bet365. They're forming a gambling alliance to help protect irresponsible gamblers. And for the first time ever, they'll be sharing data with each other for problem gamblers, is their term, so that maybe they can protect people on their platforms. Man of the hours here.
We got a big model portfolio update later. So I was setting everything up for it, getting my watch list is loaded into my technical setup. We're ready for a good one later. We're actually, as Steven mentioned, reserving more time for it. So, we'll do our normal topics, but if you want to check back in, we're going to be making a lot of moves in our model portfolio later. Just as a little tease, we're seeing definitely kind of some more interesting behavior from small caps. I would call it maybe even kind of like a tech correction, or like a large tech correction. But we'll see. We'll talk about some of the other moves like dropping Coinbase, which some people were worried about, but we looked really smart on the timing on that. So we'll go through it all later. Obviously, we're going to go through these topics with Steven, but then later, for those that haven't seen it, I actually update the portfolio live. You'll get to see some of my Excel skills in action and get to see how the sausage is made and how, Prospero does so well on its picks.
Yeah, so we're going to be getting into that in about 30 minutes for everybody. So stick around and you'll be seeing that. Let me just run through the last 2 topics of the day before we jump into them. So Amazon made a big investment in a startup AI company, the biggest investment they've ever made in another company so far to date. It's $4 billion in total. So we'll tell you what that company is and what it means for Amazon. And then lastly, Disney finally settled its lawsuit with the state of Florida in the state. And Disney stock has rallied quite a bit this year. So we'll talk about Disney. And, we were ragging on it a lot when they were going through the writer strike and a lot of the things that were happening. Maybe they're turning over a new leaf or maybe not. But we'll look at Disney more in depth and in detail. George, the first stock we're going to get into today, which, it's kind of like a pair, I feel like, with AMC. We talk about AMC more often, but GameStop released their earnings and they were pretty negative. The stock was down over 14% today. There was an analyst that came out and said by the end of the decade, he believes they will be out of business. And he said they have about 5 years of cash runway left based on his estimates. Um, and a stat that I found amazing when I read the article today, which it like truly shocked me. We'll see if the people aren't here. Let us know if this stat shocks you. Before the whole saga of the GameStop squeeze and how Robinhood, stopped letting people buy shares of it and all that, they were trading under $5 per share with today's current share count. And today they're trading at $13 per share. So, they're still well over 100% above their GameStop saga levels. So I think the real question to ask, George, is do you have the guts to short GameStop at this point?
No is the answer. I am looking, as you were talking about, like I think this is something that like retail investors get wrong a lot. I'm looking at the enterprise value, right? Because trading at the same amount is very important. Like I think I actually saw AMC investors get this wrong all the time. They're just like, well, how is AMC trading cheaper than Cinemark when it was actually not? Like it was actually trading at a higher market cap, higher enterprise value. And for those of you know, enterprise value nets out debt, market cap, looks at some of those things. So I'm looking at the 5-year enterprise value on GameStop. And yeah, it is indeed. So before the big craze, like literally like right before it, it was at about a little less than 1 billion. It's still 3 billion. So we're actually trading it 3 times. Because there was some dilution and you always have to look at that. But no, I do not have the guts to short GameStop. And I always look at this and you know what? There's a really interesting story about Prospero here. Because I actually, if there's one thing I pride myself on, it's that despite the fact that I have like 20 years of financial experience, professional financial experience, worked at my first hedge fund when I was 17 and 13 years of AI experience, I actually still try to be connected to people and I try to meet people where they are because I think that's just super important. So I don't want to talk down to anyone on these things. So instead of what I saw a lot of, which is GameStop is a garbage company and things like that, it's not a real company. Like I always like to say something like this, and this is still very true. And I've actually seen it go down. Like GameStop has a 38 profitability rating on our scale of 100, and it's got a 10 growth. So it's below average profitability, and it's not growing compared to other companies. It's actually really shrinking compared to other companies. So you look at that and you ask yourself, why? Like, why would you want to invest in that when there's other companies and companies like Meta, that has very high upside breakout. So institutions are betting on it. And then also like very high profitability and growth, a lower PE. Like, let's even look at the PE of GameStop. I don't even know if it's profitable, but let's take a look. Right? Perfect example. GameStop is trading at a 258 PE compared to Meta, which is trading at like a 25 PE. So why the hell would you want to own it just like on a short squeeze? Like that's not how you make money on a time scale. And I think for the people that have stuck with short squeezes for a long enough time, like, yeah, there was one big one, but I think as we all saw, like our company from later got in the way of that. So like, this is one of those companies that I would never short because you never know. And what you do never know, and what people don't realize about this is it wasn't until BlackRock got heavily involved going long GameStop that it really started to go up. And I heard BlackRock cleared $1 billion on that trade. And one of the things they do is they started buying shares, lending them out, and then yanking them. So that applied pressure to cover. So, like, for all of the people, like, retail won that, but retail plus hedge funds won that. They started the craze, right? And ever since then, we've just been seeing retail getting their butts handed to them, including a stock we talked about, SoundHound.ai, and that is going pretty much exactly like we called it. You know, accelerating downward movement after it hit its cap, institutions making money hand over fist. A lot of people later in the game, I see like following up on this, being like, what happened to SoundHound? Well, what happened is you got sold on an overhyped stock again. And if that's you, you should really be using the Prospero app, because the Prospero app cuts through the noise. And the Prospero app was never bullish on SoundHound. It had elevated net option sentiment at certain times, but our long-term signals never liked it, especially those profitability and growth. And that's why it's important to look at a holistic system, because you know what? At times, GameStop's upside, long-term signal, long-term options markets derive, was higher than downside, but no longer. And you actually see today, even yesterday, the downside breakout on GameStop was 68. It's up to 79. That's a long-term signal. Basically, everybody is increasing their long-term bets on GameStop. And upside breakout is also going down. Net option sentiment is going down, which is our main short-term signal, kind of simplifying where institutional options bets are being made. It just doesn't look like a good stock. But that being said, I also would not bet against short squeezes. And one of the things that we actually do on the app is we don't recommend long or shorts in our picks if short pressure goes above 70, because we like to risk control in both ways, and it could go the other direction. But I think you should, if you're still long GameStop or AMC, you should really think about better things to do with your money than gambling on short squeezes. It just hasn't been working. It worked once, and it worked once with the help of Wall Street. And since then, all the Reddit army is doing is making money hand over fist for Wall Street as they pump these stocks up, shoot them down, and know exactly how to manipulate retail investors. And you're basically in an army of people being manipulated to make Wall Street money. And if you don't want to be there, I suggest you think about changing your position.
And so you kind of alluded to it, one of the dance partners in that whole situation was Robinhood, and they launched a credit card that gives 3% cash back to people who are part of their gold platform. And the stock reacted well. And I think, so much time has passed. Maybe you could kind of talk about the difference between Robinhood and GameStop as like a company, like a business that maybe they have a bit more of a real business. But has enough time passed? And is Robinhood taking the right steps to win back the trust of investors and people who use their platform?
Robinhood is like candy or junk food. Like, you trade on Robinhood, it's going to feel good. It's going to be easier than eating vegetables, but it's going to catch up with you eventually. That's the best analogy. And I actually think the things that they do to make like trading options and kind of the more complex kind of pair trades with options easy. But eating candy is easy, but it might give you a stomach ache, and that's like the perfect example. Like, they have cool products to make options trading easy, but the bottom line is most people shouldn't be trading options. And actually, this is like a funny joke that I make about like securities laws and everything like that. Like, if you're talking about the most flagrant violations of securities laws that I see often, it's these brokerages allowing people to trade options that aren't qualified to trade options. And there are supposed to be laws enforced to verify that people are more qualified to change options than Robinhood does. All the brokers slip through this, but it's kind of funny when people talk about like breaking laws and institutions, because like the law I see broken that much is those. Like, people are supposed to do much deeper checks on that. And Robinhood is like, it's not a good business. Like, it is the opposite of Prospero. Prospero is here to serve people, form a partnership with users, give value, and not ask for value in return, to build trust. Robinhood is pretending it's giving you value. and really screwing you over. For those that don't know, other than them taking away the buy button, how the Robinhood business model works. Basically, like they grab a bunch of retail trades and they let places like Citadel, about a third of their revenue, jump in front of you. So you think you got quote unquote best execution on your trade when you try to trade a stock that you think is trading at $5. They get you in at $5.15 and basically hand that 15 cents a share over to BlackRock because they let BlackRock buy it at $5 and sell it to you at $5.15, essentially, if not worse than that. So that's your trade commission being handed to BlackRock. At least it's better off being handed to Robinhood. Sorry, not like BlackRock, Citadel. Citadel is like where, and I think I might have said 33% of their revenue went to BlackRock, but no, 33% of their revenue goes to Citadel. A lot goes to Virtue Trading, which is like the much less known villain of this, but is pretty much the same company as Citadel. They just aren't as well known or pay as much for payment for order flow. But yes, those are the costs of your trades. So you should really use another broker if you don't want to basically be writing checks to Citadel, because that's what happens when you execute your trades. But I should answer the question too. Robinhood has a real business, but its business is built on the opposite of what I believe the future of businesses are, which are businesses that do well. We're about to drop a speech that I made at Berkeley in front of 300 plus people that I'm really excited about. I'm getting more speaking engagements, but that's the main thing that I'm talking about. The future is businesses treating people well, because our planet is getting destroyed by the opposite. And businesses like Robinhood have a shelf life because they're screwing people over and people are getting smarter because they're tired of being screwed over. And that's why Prospero is making a bet on helping people, because we believe the rest of the world is going to catch up, and long term we're going to be rewarded for that.
And so with Robinhood, you mentioned how, they may let people who aren't qualified to trade options trade them. And the next story kind of goes into that maybe gambling culture that we're seeing develop in America, where 7 of the nation's largest gambling companies, which control 85% of the betting, they formed a new gambling alliance to share information about problem gamblers amongst each other, which is the first time that's happened. Um, it scares me because gambling's been legal in most places for like a few years now, and it's either they know they're doing harm and they're trying to get in front of the stuff to come, or maybe they actually care about these people, George, and they're just trying to really help people. You know, so which way do we think it's going here?
I think they care about people as much as the people that gamble, as much as Citadel cares about retail investors. I think exactly that much. I think Citadel might actually even care a little more, because like Citadel doesn't want to bankrupt you. They want you and have you give up. They want to like keep going. I don't think these gambling places, like, that's the classic example of the person like throwing their life away on gambling. Like gambling doesn't really give a shit about that. At least Citadel employs psychologists to like beat you up just enough that they take your money, but they don't get you out of the market. So I would actually say Citadel actually cares a little more about you than these gambling companies. But it is just so like there is so much evidence of how addictive and toxic, gambling is. And it's kind of similar to the alcohol industry. They've basically done studies that like like a big chunk of their customers are just like alcoholics that are just like damaging their bodies and doing that, and they like depend on these people that get addicted, and they don't care, and they put the ads, and like they put the ads about like, oh, what a good time it is, because they just want people to get addicted. And it's very sad that we have that much of that going in society, and that, kind of to the point of the rot in our country for a long time. Like they kept these gamblers at all arm's length, but now our government is basically being like, our rights, our country, our livelihood is being sold to the highest bidder. And that's what basically happens with these gambling entities. Hey, you want to lobby enough? We'll make whatever legal, and we'll just like have, all these companies could compete or grow. Like that used to be why there was gambling restrictions, because that was back when the government actually like pretended to give a shit about people. Now they've seemingly given up on that, and they'll like write checks to whatever the hell. Like, as long as people are writing them checks, they'll do whatever the hell they need to. So it's really like gambling is like one of those things, because like, you look at it like our country was built on Wall Street, like having advantages, extracting money, blowing up the economy, getting bailouts. That story is as old as time, right? But those same people that at least protected people enough, like, to not expose them to gambling, they used to care that much. They don't even care that much anymore. They just like don't give a shit about people. And it's really sad to watch.
I couldn't agree more. And I'm 25, so I have direct friends who are in their early 20s, and I think they're not building the best habits. We'll just say that. So I am kind of nervous the way the gambling culture in America is going. To spin back to our last topic, we had a question from Chris asking about which brokers are good then, and don't let the big boys jump in front of retail. If you had any recommendations.
So Fidelity is the best in terms of their ethos, in terms of what they do to protect people, or Vanguard. But like, Vanguard, it doesn't have the same bells and whistles as Fidelity. Like, I use Schwab because like I like Think or Swim, and I actually think they have the best, and like they have the best combination of usability and ethos. But I would say, if you're like, but like, I'm doing more complicated things, like I would say like use Schwab, or like, but if use Fidelity, and if Fidelity can do everything that you want it to do, that's the best place to put your money. And avoid Webull, Robinhood, 212 trading, all of like public, all of these upstarts like are free trades, but their business is fucking you over.
There you go, Chris. I think you probably steered in a good direction there. Hopefully, maybe you're already on one of the better platforms. Our next
I
story.
do use Webull, and I use it for research. So research is different than trading. Put your money in the ones I'm talking about. Use whatever the hell you want for research. It's actually like a funny thing that I learned. Like, we have a partnership with NASDAQ. And a funny thing that I learned was, I was talking about their level 2 data because I like it. And I was like, I buy level 2 data from Webull. And I felt a little guilty about it, but I found out something hilarious. I was like, yeah, like, because I like level 2 data, but I've told NASDAQ very frankly, I was like, I will never uh, pay $2 a user for level 2 data. And they're just like, $2? Are you kidding me? Like, they were like, that costs at least $10 a user. So like, Webull is actually eating $8 a month on my subscription. So now I love that. I'm actually costing them, paying for level 2 data, I'm actually costing them $8 a month. And I now love that again. But yeah, I think that's a difference. Like, don't execute trades on these platforms. Don't put your money in, Webull, 212 trading, Robinhood, especially, and public to a lesser extent. I like interactive brokers a decent amount. Like, I think they're pretty, I think they're pretty populist in terms of how they operate and their fee structures. And I think interactive brokers is good. I would add that to my list of the better ones.
We may be getting a little off topic here, but I'm interested. So if it's quick, maybe we can answer. Like, what is level 2 data, and like how many levels of data are there? And what are you
Oh,
actually
there's
getting
like
when you buy
10
them?
levels. No, my knowledge is level 2 data is like the deepest level. So you have your market data, right? Bid, ask, all that stuff. Level 2 data is the whole order book. And there's actually a deeper level than level 2. We'll get into a second, but it's like a little different, right? Level 2 data is just like all of the orders that are being placed. So you get the deep book of like where people are being placed. Like, if someone's got like a 10,000 share order, that's like 10% above where the stock is trading. It's just sitting there, but you see the demand, right? And you see the mechanics. That's the important thing about level 2 data. And I actually like it from predictive purposes. Sometimes I really rely on it pre-market. If I see there's like a buy or sell wall, that definitely influences my decision on what I want to do. But there's a whole other level of data that's like, when people are like stop loss hunting, right? They're basically seeing where you put your stops and they're buying that from brokers, and they don't even sell that to retail. That's something that you can only get if you're an institution paying a lot of money to these brokers. And that's why there's like short attacks on them. They can see when people are getting nervous and placing their stops or where the stops are, and they can, launch attacks based on that.
Wow, that's super interesting. Okay, get back to our topics that we had scheduled for today. Amazon has invested $4 billion total in an AI startup company called Anthropic. It's their largest ever investment to date in an outside company. What do you think this means for Amazon? And maybe what does it mean for Anthropic? I believe they're a private company, but maybe they're one of the bright up and coming AI companies.
Well, I just think it's really, I think it's really interesting. I mean, Amazon's pretty good in AI as far as I'm concerned. So the fact that they're this excited about Anthropic, and they probably have a good window into like Anthropic's like real capabilities, their roadmap, things like that. That is quite a compliment to Amazon, because Amazon is like pretty classically like acquire or compete, right? Amazon doesn't do a lot of investing in companies that could basically sell to other people and put them on like the same playing field. So that really says something about Anthropic. But you could also make the argument that the AI wars, when Microsoft got ChatGPT, it's why we talk about like Google working with Apple on Gemini. It's basically like springboarded this, I would say, real need to have the elitist of AI tech, or that you're falling behind. And I think Anthropic is a bid to do that. But Amazon is, we talk about it being a little overvalued, and there might be, and it's one of those things that's for a reason. Its PE is like closer to Nvidia, and Tesla in the Magnificent Seven, and despite the fact that it's not growing nearly as much as those companies, and is not really as profitable as those companies. Or the companies like kind of below it, trading it at better value on like an EPS basis. So Amazon is a very interesting thing, because like, why does it get that like overvalued? Is because people just trust it, and there's reasons to trust it. And I've even thought about like, how much I want to own it long term and how to get in, because I just think they're a better run company than any other company. So if they trust Anthropic that much, I trust that Anthropic's tech is that good. And just like another side note, while we're on the concept, like on Amazon, one of the businesses that we always talk about we talk about shipping and healthcare being like, I think they're like big growth businesses over the next 5 years. And they just announced same day prescription delivery. So like, how long do pharmacies have? Like how much is it going to go? How long until they go the way of the bookstore, if Amazon is basically delivering stuff to your home same
Same
day?
day too. Yeah, yeah, same day, which is crazy. Chris says he uses Anthropic's Claude daily, compared against OpenAI. Claude gives good answers. Started using after techies I know brought it to my attention. So that is what Anthropic's main product is, Claude, which is a large language model, I believe, right? So it's kind of like ChatGPT competitor.
Yeah.
You kind of mentioned how like all these companies are teaming up for AI, and Mark Zuckerberg yesterday posted a picture of him and Jensen Huang, and the caption was just jersey swap. So maybe there'll be a Meta Nvidia announcement. That would be crazy if that came out. And I know Meta already buys like the most B100s or whatever the product is that Nvidia releases. So we'll see if anything comes of that photo in the future.
Yeah, they're a huge customer. Jensen Huang would probably like, he'd do a lot of things with Mark Zuckerberg.
We'll leave it there.
Yeah, no details on that one.
Last topic of the day before we'll switch over and you guys will see us update the model portfolio. Um, Stock we talk about a decent amount. Disney settled their lawsuit with the state of Florida in the state. So I believe they'll be able to keep their special district rules because of this settlement. And we kind of ragged on Disney stock a bit. You know, they had a lot of stuff going on, this lawsuit, the writer's strike, just general lack of content or poor content. Um, is Disney turning over a new leaf? Their stock has kind of rallied this year. So are things looking better in Disney land?
Um, I mean, I'll take a live look at the signals. Like I just don't really love. It's just my oh wow, its upside is down to 42 and downside at upside at 48, downside down to 42. Its growth is down at 43. Yeah, it looks like garbage. I hadn't looked at it for a while. It actually had pretty good upside at one point this year. But no, it looks pretty terrible. And like, okay, so like when something has like low upside and like lower like 48, 42, like what's happening? It means institutions are not betting that much one way on the other, but like the bets are pretty close to even though below average in terms of how much they expect it to go up in about a year versus not, versus up versus down. Um, to me, the albatross is Disney Plus, and like it's kind of like a marker for their bad management. And I would say similarly, like I think Peacock is also hemorrhaging dollars. Like you think about that bifurcation, right? Like you are literally like rebuilding the wheel. Like all of the infrastructure it takes, like just to give one example, Netflix does a lot to optimize the video quality and make sure it works on like any connection, right? That costs a shit ton of money to build and even more money to build it on an accelerated timeline. And Disney did that. Disney Plus works great. Like I would say, like I've used Peacock and it errors a little more, and that's the true WTF. But we'll get to like the punchline here in a second. But it's just like, why burn through all of that cash when you could just like you're like literally like costing your company a shitload when by the way you have other issues like you just mentioned. Like why would you do that when instead you could bring in a ton of revenue for selling the content? Like that's bad management in my opinion. And all of these places just like completely overestimated the revenue, or maybe they just didn't care. And like some people's just like, hey, we should build a streaming thing, and they didn't really do a good cost benefit analysis. I'm not sure which one's better. Like they did a shitty analysis or they didn't do one at all. Either way, it's dumb. And like anyone with even a rudimentary understanding of tech would tell you that that platform would cost so much money versus selling your valuable content. It just makes zero sense. It's like the only way it makes sense, and you see this in stupid businesses all the time, is as a pride thing, right? It's basically like, oh, well, we want to have a streaming service too. We don't want to just like give our content to this other service. It's dumb. And I'd actually like to know, I don't know if anyone knows the numbers on this, how much money they were making selling their content versus, sinking this money into it. Like, I would also like to know if I wonder if they have the numbers on how much it costs to build. But I imagine, like, just to break even, it's going to take a good 5-10 years on whatever they spent to build that. And, now you get what you get. Now you have a company that isn't growing because you burned through cash you could spend growing your core business, growing this side business that also ate into your revenue in other ways. Like it would actually be interesting to know if Disney Plus actually brings in more revenue than selling their content. Like I don't know the answers to any of these questions, but I certainly know like they were doing just fine without it.
Hmm. And it's interesting to
People
see
had it.
that it's gone down in the Prospero signals.
Yeah, I hadn't looked at it in a while because I like as I say, that albatross of a business, uh, like is not a good look for them. Um, but yeah, I think that I wouldn't touch it with a 10-foot pole.
One thing I do want to mention, just before maybe we do the switch over, we were talking about the gambling culture before. They just launched ESPN Bet, which I think their first quarter of reportings will be this one, which has March Madness in it. So maybe that's some potential upside for the stock, or I don't know. It's just always Disney getting in gambling. It's just like, what have we come to?
Yeah, exactly. They'll be all like Christian about some things, and then but anyway, um, pretty much everyone I know says FanDuel, like DraftKings, they're gonna win. Like anyone that is like knowledgeable of this stuff at all. So I trust the people that are knowledgeable more than me. And it's like kind of the same thing, right? You could maybe grab a strategic investment in that, which I think they might have, or the NBA. Like instead of doing that, again, you could share data. You could create a flow agreement where you get a cut of any bettors that are like doing it through the existing, and then you don't have to build that app and like that betting infrastructure. It's just the same story, like different book, like where they're building out all the infrastructure on the betting that another company has already built, and they could just work with that company and take revenue. Instead, they just have this weird pride of authorship that is clearly not creating a growth business for them.
Yep, we'll see. We'll see. Do you want to do the switch over to the model portfolio, and I'll hang here with the chat? Want to make the move?
Yep, I'm moving.
All right, I'll see you on the other side. All right, chat. So while George switches over, he's going to change his setup and get ready to do the model portfolio update. We have a lot of new people in here today. Thank you so much for watching. Hope you enjoyed the topics that we went through. If you have any stocks you want us to look at when we're doing this model portfolio update, feel free, comment them on YouTube or Twitter. I do want to mention that if you're watching on YouTube, we also, and even if you're watching on Twitter, you could go over to YouTube. We post these streams on Spotify. If you're not able to catch them live and you want to watch them on another platform, you can use the link that's in our description, and follow us on Spotify as well. Just thought I'd throw that out there. While George is switching over, let's take a look at how the markets are looking in Prospero. So we'll look at the QQQ first. QQQ is at 43 net option sentiment currently, and it was at 46 to begin the day, so it's kind of slightly gone down. And the SPY is at 51, and it was at 53 to begin the day. So they've both gone slightly down throughout the day. SPY still holding steady above the QQQ in overall net option sentiment. Is the market up or down? It was like even almost when we started.
And
QQQ,
we're off, right?
And we're what? To
You
the
can hear
model
me.
portfolio? Yeah, I can hear you.
All right. So first thing we want to do is, and I do want to set this up because like my theory is actually that we are we're sorry, I'm trying to multitask here. Also, there's just audio.
Something I did notice in the markets over the past month is like the volatility has been so low. Like the market's just kind of been ranging in like a 2%, like up and down.
Yeah, it's been a weird, like everybody's been saying it's been weird. I've actually been, I should have, we were up to 60% yesterday. We took a big 7% hit today. Like we're in like, and part of me just kind of wants to chill on it, but I do want to see, like some of the sector stuff. I haven't really had time to look over it today. That's why we're leaving extra time. So we are just going to take a quick, what is it? Oh, there we go. We're just going to take a quick look at what's going on here. 6. What is that? 20. For those that have never coded anything with stock predictions or anything like that, it is very like one of the reasons I'm doing this manually. I could automate the whole thing, but in theory, but it is actually very difficult to like get the weeks. Like there's functions that do it. Like, and I imagine there might be some. I'm not sure in Google Sheets, but wait, it goes back to the beginning. I don't know that. Okay, what's going on here? Utilities and real estate. Yeah, I thought real estate might get its revenge. Well, I'm glad I got a Douglas Elliman yesterday. I was like kicking myself a little bit, but it turns out I was right. It turns out I was right to de-risk. What's going on here? Anything standing out? No, it just looks like some concerning red trends. Like tech is, I'm gonna pare down tech for sure. But before I do that, I want to just take a look at everything in the newsletter, right? And I've been thinking about this stock, which I'm just like, I added it after market yesterday, taking a bath on it today, but I'm actually considering loading up more because it has stayed low in that option sentiment, but the trend is not looking good. I might just hold it and not drop it instead of adding more, just because I think I'd rather wait to see any evidence that it's flipping the other way. Oh, that 5 is not looking bad. Maybe we'll revisit at the end and see. All right, same thing for PTCT. That's another one. We were up on this, but let's look at more of like a shorter time horizon. Going up. Oh, not there. How about 5? Too confusing. All right. Now the only other things I wanted to look at, I definitely want to see what's going on with NVIDIA. Yeah, that's no bueno. How about on a shorter time scale? Not bad. Not bad. And if anybody has any questions, I'm going through this pretty fast because I got a lot of wood to chop. But questions are always good. I don't think I'm making any moves. Maybe here. Because I might not want this energy sitch. How about 4 hours? Yeah, I might get rid of that. That, unlike the other ones I'm looking at, doesn't look great. All right, so I think I'm dropping. Can you talk to me about how many open model portfolios do we have of E? It's got low net option sentiment. 12, 13. I might just hold it. I might hold all this stuff and just see what happens tomorrow. Xerox is down, and that's good. Yeah, it's just been too weird. I'm not making any moves on this yet. Oh, that was nice. All right, now let's get into the mess that is the model portfolio that I just took a bath on today. I need to cut down on tech, especially overexposure on tech. It's been a little bit since this one, but we're definitely doing this. I think we got plenty of time today is the good news. I'm glad I don't have to be like manic about this. And I'm glad I don't feel like I missed anything on that. We want to do, we want to do the little title. What is it? 27. that is what we're going to do. And yeah, for those that are new to the stream, like this is our normal paid content. It costs $20 a month, but we, to make sure, like to reward people that come to the stream, we just show you exactly how we're doing it. Okay, so the first thing we do here is we're going to look for the whoa, that is a terrible. Suave is looking bad, as is TDG, XOM. Actually, let's look at all. Let's find it's better to do it this way if we're looking for it. Swap is actually up today. Odd. It could mean people are thinking it's getting overpriced though. It's coming back up. Can you tell me about the trend on Suave? Net option sentiment trend.
Is at 48. It is hitting a new high. It was at 45 this morning. It's pretty tight trend. The low is only 34.
All right, we're going to hang on to that. It looks like TDG is fine too. Okay, but we want to look at TSM.
Ronald,
Can you talk about the TSM net option sentiment trend? I believe it's down.
Sure. It's at 82 right now. It was at 83 at noon. It's at a low of the trend. Kind of hitting the same low though. 82 it hit before.
All right, so I think we want.
Question from Ronald Wagner: keeping NVIDIA indicators in Prospero apps still look good despite the drop.
Yeah, I mean the thing about NVIDIA is it doesn't have good long-term ratings. So when we're looking to reduce exposure, we really care about that. But I'm just reducing it here. I'll probably come for NVIDIA too if we have two, but I'm just like right now. Can you talk to me about Melly's net option sentiment trend? Oh, I didn't look at this. Let's take a look at Melly. Honestly, I didn't even mean to have this much Melly. I thought I had cut more.
So that's 70 right now. It was at 74 before. It's towards the high of the trend. It's kind of a neutral trend.
And I'm still going to de-risk. Do you know how to check how many open longs and shorts we have?
In the model
I'll show
portfolio.
you so you can do it in future times. This gets us our unexited positions. All right, 62 longs. $66 shorts. Okay. So okay, I don't mind. I want to be a little more short than long right now, so I don't mind this little axe I'm taking to dupes. All right, SMCI. How's NVO looking? Can you talk to me about NVO net option sentiment? And then also, do we have any wins or losses on how's that looking? Wins or losses as NVO?
NVO is at 72. It's rebounding off of hitting 55 in option sentiment. It's kind of uptrending now in the last little bit.
All right, we'll hold on to two of those. How about MCK?
It's at 71. It's hitting lower highs along the trend.
Got a lot of healthcare exposure. I didn't even realize. But it is doing well today, so maybe we won't reduce it today. CDNS. Can you talk to me about CANS? An option sentiment momentum.
CENS?
CGNS.
Oh, okay. It's at 83 towards the high of the trend, trending upwards.
All right, I think I feel good about that. So to answer the earlier question, it doesn't look like, I think we only have one NVIDIA, so that's fine. We're going to hold on to one NVIDIA. Oh, we have two IWM. Oh, it's a good day. This tells us definitely better for small caps. But I think it just might be a correction on that, so I don't want to be too extreme. But let's check what's going on here. Let's check on out. Yeah, geez, we're getting beat up. And turning back on was just always interesting. No, that's fine. God, our shorts, like this tells you, like, this tells me it might be a correction because all these ones that typically look good as shorts. Oh, can you tell me about Lucid's non-option sentiment trend?
It's at 20 now. It was at 30 before. It's hitting the lows of the trend.
Are we a win on FLO?
We are.
Great. We're getting the hell out of there. All right. Ooh. Oh, our favorite stock to diss on, Cracker Barrel. Are we winning those? Poor Cracker Barrel. I was actually like, I was in Florida this past weekend, and I passed a Cracker Barrel, and I was like, I couldn't help but be like, I just rip on Cracker Barrel all the time, and I don't even really mind it that much. Just I mind it as a stock. I wonder if like we're not big enough yet, but it would be pretty funny if the Cracker Barrel execs were just like, this motherfucker.
They're both
single-handedly bringing down the Cracker Barrel empire. Are we winning those?
No, both are losses currently.
All right. We're holding on to one. How's the net option sentiment trend there?
It's actually, it doesn't look too bad. It's hitting 63. It's hitting the high of the trend. It was at 58 before.
Well, we don't want that. We're shorting it.
I know. That's why I'm saying it kind of reluctantly.
Oh, no. I mean, we're holding on. Like, we're holding on.
Spiky Dude's asking maybe Q1 rebalancing for small caps in the last couple days.
Definitely that. That's what I would definitely say, which is why I don't want to overreact. Manage. We manage risk and we don't overreact. But like, yes, that's what I'm absolutely thinking. CPRI we definitely have to bail on though. Yeah, I think CG. I think we probably want CG. Did you tell me CGNX's net option sentiment trend?
Nope. CGNX is looking. It's hitting a high of the trend, but it's kind of like pretty neutral. It's at 57 right now.
Are we winning these cold? Well, I think we're just gonna get rid of one of them. Oh, I gotta get in the new position soon. What is going on with PETQ? Is that right? 94%? No, I don't know what's going on with you. Google, what's messed up on Google? Oh, that's going in the right direction for us. We're hanging in there. Okay, We got to get to the new filter. Otherwise, we're never going to make it to the end. All right. Everyone else survived the axe. Did you talk to me about net option sentiment trend yet?
For which one?
QQQ and
QQQ is at 42, and the SPY is at 50 even.
There we go. That applies still. Okay, let's get into the old filter. Gotta really hurry. Okay. All right. The Excel wizardry I promised all of you.
It's why the people stay till the end to watch this.
Okay. Is that for real? Broadcom passed Meta. Wow. That's interesting. Not that we're adding any tech. Can you tell me what's going on with ODFL's net option sentiment?
It is at 87. It is uptrending. It's at the high, where the high is 88, but it's right near the high of the trend. Hitting higher lows, looking pretty good.
Sorry, Google. I want ENPH in there. Can you talk to me about ENPH's net option sentiment?
ENPH is at 73. It's also at the high of the trend, uptrending, higher lows, looks good as well.
How about DoorDash?
DoorDash is at 91. It was at 92 before, so it's close to the highs. It also is uptrending.
We got no time. We just gotta diversify. But what is ALL? I've never seen that appear before. Can you tell me what company?
Allstate.
Oh, all right. Yeah, I like
that trend looks good too.
Yeah. Let's grab a pair of Allstates. I like that trend.
It's like a Warren Buffett move. Doesn't he own like a lot of Geico or something?
He does, yeah. We gotta.
Ding, ding, ding.
We gotta get wrapped here. All right, we're going to the shorts. How many shorts do we have? 18. we're just going to do the thing where we're not too picky about this. All right, AIRC, net option sentiment trend.
Ooh, it's at 13, downtrending. Looking bad.
Uptrending on price, though. No, not doing that. Oh, we're going to take... We got burned on Warner Brothers Discovery last time. Could take another ride. Yeah, we're gonna give it another whirl. How does Wolf look?
Wolf looks, it's rebounding off its low of 14. It's at 21 now, but it's kind of a neutral trend.
PBR again. Oh, that's an energy. Nope. HIW. Nah. It's RCM. What the hell is miscellaneous commercial? What business is that? No trades today.
What?
That's weird. All right. We're gonna take a ride on this and then be done. We're going to our higher resolution screen, which I got to make this pasting easy, so I didn't have to make sacrifices. Okay. I took a bath today. Today was like my worst day in like a long time. I need to nurse my wounds. But it happens to anyone, just so you guys all know. We all have bad days. And just so you guys know, on my bad days, if it starts to go that way, my attitude is always just like, don't make too many moves.
Especially with it being the end of, like the quarter, right? There's probably other factors at play in these last 2 days.
Yeah. All right. Any questions before we depart? I don't know why I said it like that. Depart. Any
Before we
questions
sail
before
away.
we depart? All right. Well, thanks for coming, everyone. We'll see you again on Monday.
Yep. Happy shortened week for everybody. We'll be back normal time. And happy opening day for the baseball fans tomorrow. I want to get that in there.
Oh, I didn't know. I feel like they make it earlier every year. Like, I feel like it was always in April, and they're just like creeping further into March.
I don't know how quickly you have to go, but they had games in Korea like last week. It was so weird. I've never seen something like that before. Yeah, Dodgers and I think the Padres or somebody played 2 games in Korea on like March 20th. It was so weird.
I didn't even follow it. That's like,
I know. Nobody did
get on my radar. That shows how stupid it is.
Yeah. But anyway.
All right. No, I mean, I was waiting for questions. I was happy. I feel dumb today. I would be happy to answer some questions and feel smart. But maybe just better to end.
Yep. Think of the questions for Monday, everybody. We'll see you then.
All right. Thanks a lot. Bye-bye.
Bye-bye.